Industrial stocks are outperforming the broader markets, but for how long? This is Sectors Up Close, and we're talking about industrials. As stocks have ripped higher from the depths of the tariff sell-off in early April, an unlikely group has climbed to the top of the S&P 500's leaderboard. Industrial companies have gained 15% so far in 2025, more than double the gain of the overall index. Tariff tensions may have eased, at least for now, but the spectre of an economic recession still looms. So, should traders keep buying American-made? John Stolfus is Chief Market Strategist at Oppenheimer Asset Management. So, John, the S&P Global Manufacturing PMI slid the most in 3 years in July. That marks the first contraction since December. Will the production slowdown hit industrial stocks?
Well, we can't help but think that most likely what you will feel within the market is a certain, within it is a consideration of that pause. But, the manufacturing PMI has been all over the place over the course of the last few years. Generally speaking, manufacturing, trails services in the U.S. economy as a result of the way it's about 70% consumers and it's very little in manufacturing. In fact, that's what this whole trade business is about. We would think that the intermediate to longer term, the 3, 5, 7 years out for industrials looks remarkably good because of all the different types of equipment that are manufactured within industrials.
Well, let's look closer at aerospace and defence stocks. They've been boosted by the heightened geopolitical tensions. Could that momentum end if conflicts in Ukraine and the Middle East settle?
We think that aspect of it, but there's a generational change occurring within the defense industry that has really changed the battlefield, wherein it replaces troops or boots on the ground, so to speak, to great extent, by things such as drones and lasers and all types of things like that. Really, very much, in the old days, they used to talk about Star Wars and then applied it to defense. Well, this is about 20, 25, 30 years later. And here we are, this is really, the future is here. It's back to the future in essence. And so we can't help but think that defense stocks, just because of the change in terms of what the military uses to, with greater efficiency, take care of its missions without posing risk to its troops, this looks like a remarkable period.
Meanwhile, President Trump is readying plans for industry-specific tariffs to kick in at the end of this week. That includes copper, lumber and critical minerals. Will industrial companies be able to change their supply chains before those shortages start to appear?
It depends upon the operator involved, where they are currently sourcing from, where their operations in terms of mining, refining, and shipment, all that kind of thing. And what we would expect is the workaround here. So you'll want to look for the sources that have the best opportunity to work around how they will best be able to offset the pressure that the tariffs put on their production, revenue, and sales. So what we'd have to think here is much like any other business. It appears to us to be very much within this space a stock picker's market.
Also, higher semiconductor tariffs are on the horizon. Who's the most at risk?
We can't help but think this will be less of a problem than many expect, but it will still be a challenge. And for investors, once again, consider the company, consider the management, the location, the tariff regime involved, and then the need for the product, and then how can the tariff be spread among importer, exporter, and the ultimate consumer or the business that buys the product. There's a lot of ways to work through these that on the surface may look absolutely intolerable to deal with, that actually call for a very manageable story and likely very rewarding to the companies that know the workaround.
So finally, John, Oppenheimer have updated their call. They're seeing the S&P 500 a third consecutive year of 20% gains, a feat unseen since the late 1990s. Will industrials continue to lead the way?
We are entering an age in which industrials are going through a revolutionary, a watershed process as a result of AI. Across the board. It's not that AI has not already been in existence there, but the advanced AI, the contemporary AI, all of that coming in here gives us the idea that industrials have certainly come of age, as they haven't for many years. The old analog industrial age, they were big, and then they were relatively forgotten by investors for long periods of time in terms of relative performance. But right now, they are sharing center stage, and it's important to note that might be something that lasts for longer than many might expect.
That was John Stolfus from Oppenheimer Asset Management. Don't forget, you can watch more videos on Reuters.com.